Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning June 20th. Well, there are three important things on the schedule this week. The Brexit vote, the Brexit vote, and the Brexit vote. I can't overemphasize how important this vote is for the markets. Let me just quote from a few public figures. IMF head Christine Lagarde last month warned that the impact of Brexit would range from pretty bad to very, very bad. Finnish Finance Minister Alexander Stubb said there would be economic mayhem if the UK votes to leave. He feared it could be the Lehman Brothers moment of Europe. There would certainly be, shall we say, market turbulence. In the first case, the pound would plunge. The euro would also come under pressure, I expect. Funds would flow out of these currencies and into the dollar. The safe haven yen and Swiss franc would also probably come under upward pressure, although the Swiss National Bank has already warned that they'd intervene. Stock markets would be sharply lower too, I imagine, while gold would probably get a boost. The economic side, though, is really the least of the problems stemming from Brexit. Central bank intervention can help the markets to survive the initial shock. UK and EU trade would no doubt suffer, but it'll probably just mean slower growth, not depression. The big problem is the implications for the European project, the ever closer union that the EU is pledged to pursue. The German foreign minister told a conference last week that if Britain leaves, quote, the EU will find itself in a deep crisis. It would require concerted efforts to ensure that a decades-long successful integration effort does not end in disintegration. May I repeat, does not end in disintegration is what he was worried about. Eurosceptic parties in the Union's heartland, such as France, Germany, and the Netherlands, would get a boost and might even demand their own referendum. In fact, the reverberations might be heard as early as 3 days later, on Sunday, when Spain holds a general election. Now, so far the signs aren't good. The polls are showing a majority in favor of Brexit, a small majority. Polls aren't perfect, though. Remember the UK general election when all the polls unanimously predicted a hung parliament, but in the event the Conservatives won enough seats that they didn't even need a coalition. Or the Scottish independence referendum. The polls there also failed to predict the result accurately. Unfortunately, a lot of work since then has gone into correcting for these errors. Nonetheless, even if the polls are accurate, there's still a large proportion of people who are uncertain, a large enough proportion to sway it either way. So, stay tuned. Now, what else is going on during the week? There are a few other important events. One is the preliminary PMIs, which are also out on Thursday. Complementing the European PMIs will be the ZEW survey on Tuesday and the IFO survey on Friday. On Tuesday, ECB President Draghi speaks in the European Parliament, while later that day and on Wednesday, Fed Chair Janet Yellen will present her semi-annual monetary policy report to Congress. We might get further insights into what officials are thinking about the long-term outlook for rates. Finally, on Friday, the U.S. announces durable goods orders. These will all be important if Britain votes to remain in. And if they do vote to remain in, then I'd expect to see some measure of relief. I'd see the stocks rallying, gold falling, sterling and the euro gaining. If they vote to leave, though, yes, I have to agree. I think the phrase, the Lehman Brothers moment of Europe, is a good way to put it. We're likely to see a massive risk-off move. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.